All right, so let's talk about what today's market is really teaching you before the bell rings. All right, so let's lock in right quick. This video right here is not motivational. This is education, right? Because I know motivation feels good, but understanding makes you money. And before the market closes today, I want you to understand what's actually happening, not just what the headlines are saying. All right, so let's tune in. Come on, let's get here. So right now we're watching the market move up again. You see green, you see people celebrating, you see bullish sentiment. But the real question is this: is this strength or is this confidence built on expectation? Because those are two different things. Okay, what we're seeing today is a market being powered more by belief than by reality. So what is the belief? That the Federal Reserve is going to cut interest rates soon. And let me explain why this matters in simple English, right? When the Fed raises rates, money becomes expensive. Borrowing slows down. Companies pull back. Growth tightens. And when the Fed cuts rates, money becomes cheaper. Companies expand. Consumers spend, and stocks usually rise. All right. So what's happening right now is not the market reacting to a rate cut, is reacting to the possibility of one. Two different things. So this is what I want you to understand. The market doesn't wait for events. The market prices in anticipation, right? So when you see green today, what you're actually seeing is investors placing bets on what they think will happen next, not what has actually happened. And that's the dangerous part. And that's where discipline separates investors from gamblers. Now, here's the danger zone. When everyone starts to believe the same story, rates are coming down, the market can only go up, people stop evaluating fundamentals and start chasing momentum. All right? Again, people stop evaluating fundamentals and start chasing momentum. And momentum is fun until it isn't. And what I mean about that is all fun until you actually lose your money. So this is where retail investors get trapped. They see a run up. They feel fear of missing out. They buy high. Then reality checks the optimism and they panic sell. That's the cycle. So instead of asking, is the market going up? You should be asking, is this move sustainable? Right? And I had to do that for myself in a position that I got in, Google. Because a sustainable rally is supported by strong earnings, healthy consumer behavior, and improving economic stability. A fragile rally is powered by hope, rumors, and projections. So right now, we're in a hope-driven environment. It's not a bad thing, y'all. It's really not a bad thing, but it is a dangerous thing if you don't understand it. All right? So here's another layer that people miss. Even though the major indexes are moving up, not all stocks are moving equally. This isn't a rising tide lifting all boats. This is a selective rally. Certain sectors are leading, mainly growth, tech, and companies tied to future themes like AI, right? Artificial intelligence. This is all you hear all the time. That means that the market might look strong on the surface, but underneath, many stocks are still struggling. So the lesson here is simple. Don't confuse index strength with universal opportunity. So let's talk about positioning real quick. When markets move like this, the average investor either overcommits emotionally or freeze completely. So smart investors, they do neither. And of course, we want to be smart investors. That's why we're here. That's why we listen to this platform now. Smart investors become selective. They ask, is this company actually profitable? Is the price justified by performance? Am I investing or reacting? Because reacting makes you emotional. Strategy makes you consistent, right? Again, reacting makes you emotional and strategy makes you consistent. And consistency, like I said before, is where wealth is built. Another key thing you need to be aware of right now is that we're entering a low volume trading environment due to the holiday period. Tomorrow's Thanksgiving, y'all. Next month is Christmas, then New Year's. Less volumes mean that every move gets exaggerated. So what looks like strength today could reverse tomorrow, not because the market is broken, but because fewer participants create more volatility, right? That's when it goes up and down, but in sharp swings. In plain terms, the market gets jumpy when fewer people are at the table. So if you're trading right now, the lesson isn't go harder. The lesson is go smarter. This is the season where professionals quietly adjust positions while amateurs loudly chase headlines. And we see a lot of headlines out there. And what you got to decide is which one you really want to be. That's the answer, right? So now here's the most important takeaway from today specifically. The market isn't necessarily rewarding bravery, it's rewarding patience and positioning, right? Instead of asking yourself, what can I jump in before the market close? I think the better question to ask yourself is what setup is forming for next week? Remember, Thanksgiving is tomorrow, so we got something next week. No, we don't have any real events next week as far as holidays, because real investors think in phases, not minutes. They understand cycles. They understand sentiment, right? They understand that money is made in preparation and not really just by just doing some random stuff. So here's what today is teaching me. Markets move on expectation and not just performance. I want y'all to remember that. The rate cut hope is driving sentiment is really not guaranteeing anything, so don't just go too hard. Concentrated rallies are not the same as healthy markets, and low volume creates emotional swings, all right? So it's just one more question that you should really carry into the close today is that ask yourself this question: am I being led by education or am I being led by emotion? Because the difference between these two determines whether you're building wealth or feeding the market tuition. And for every dollar there's a loss, is somebody making money. So if you want to be smarter tomorrow than you were today, then